I would still simply say that silver is the most undervalued asset on the planet, and it will do very, very, very well. I don't know. I don't know if it has the lasting power of gold. See, I think gold will be pegged to a new system, never come back down. It will be pegged. Gold is held in central bank balance sheets in something called the gold revaluation account. They will revalue gold and tie it to a system. We've already been told it will be tied to the new BRICS currency. Silver and gold have a 90% correlation done again through all of history. As one goes, so too does the other. I think silver is the trade of a decade, of a generation, the value.
AndySchectman, CEO of Miles Franklin, has voiced concerns about a significant disconnect between the real value of gold and silver and their current market prices, attributing this disparity to manipulation and suppression. In recent years, regulators have intensified their efforts to combat such market manipulation, imposing heavy fines on individuals and institutions found guilty. On Friday, a lawsuit was filed in a New York district court by J. Scott Nicholson, a resident of Washington, D.C., alleging that silver bullion banks, Deutsche Bank, Bank of Nova Scotia, and HSBC manipulated prices in the multi-billion-dollar market. The lawsuit claims these banks oversee the century-old silver fix and have been manipulating the physical and Comex futures markets since January 2007. Schectman believes that while silver is currently undervalued and holds great potential, gold will ultimately be pegged to a new financial system, steadily maintaining its value over time. According to FX Street data, silver prices rose on Tuesday, trading at $29.60 per troy ounce, a slight increase from Monday's price. Since the beginning of the year, silver prices have surged by 24.38%. The gold-silver ratio stood at 78.74 on Tuesday, down from 78.92 on Monday. Schectman advocates for initially investing in silver due to its current undervaluation and potential for significant gains. He suggests that once the gold-to-silver ratio corrects to a more historical norm, it would be prudent to trade silver for gold. In its latest note, J.P. Morgan expressed a structurally bullish outlook on gold and silver, viewing the recent market consolidation as a buying opportunity. The bank has set a target of $2,600 per ounce for gold and $34 per ounce for silver by 2025. J.P. Morgan noted that the recent pullback in commodities is temporary and anticipates a 10% appreciation in the broader Bloomberg Commodity Index by year-end. Join us as we delve into AndySchectman's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
There will come a time when Moscow, when Dubai, when Shanghai, when these exchanges take over for the West and provide real price setting where price discovery becomes real. None of us know what gold and silver really should be because of the Western suppression, which has destroyed the price discovery process for a long time. I believe this in my soul. And it gets frustrating when you see this. I get it. But take a step back. I mean, is the world getting any better? Or are they just, is the world just very, the world is doing all they can to keep everyone from understanding the truth. There's just not enough gold and silver. There's way too much money. And they don't want to let people in on their secret until it's too late. But if it weren't happening, why would the BIS reclassify gold as tier one? Why would the central banks buy it the way they did? Why would they repatriate it the way they did? And now you get talk of the new unit currency coming out of the meetings in Russia that are indeed saying the head of the BRICS New Development Bank said, yes, the new unit settlement currency will use Project M Bridge to transact local currencies with one another and settle in a basket of 60% currency, 40% gold, the only tier one asset that all these banks are buying. So if you think it's going to be smooth the whole way up, so these banks can quietly accumulate all of this metal, think twice. They don't want us to know what they're doing because we would crowd them out of their trade. So they're going to do all they can to misdirect. I think that's what this is on a big scale. I don't know who's behind it or how deep it goes, but I would say to expect it to be transparent is foolish. I think I've always been pretty consistent on that, saying that if I had one trade to make and only one, it would be gold because it is the only other tier one reserve asset. I know people don't want to hear that. I would still simply say that silver is the most undervalued asset on the planet, and it will do very, very, very well. I don't know if it has the lasting power of gold. See, I think gold will be pegged to a new system, never come back down. It will be pegged. Gold is held in central bank balance sheets in something called the gold revaluation account. They will revalue gold and tie it to a system. We've already been told it will be tied to the new BRICS currency. Silver and gold have a 90% correlation done again through all of history. As one goes, so too does the other. I think silver is trade of a decade, of a generation, the value, but it won't be easy. And I think if I were being completely candid, when that ratio corrects anywhere into the 40s, I start trading into gold. Doesn't mean I'm not wholly bullish on silver. I am, but I think that there comes risk with it because, look, it's not like it's not being accumulated. India's bought 650 million ounces in the last 2.5 years. That's 10 times the registered category or more. On Comex, the LBMA has 800 million ounces total, of which 500 belong to the ETFs. That's double what they have to play with, 300 million supposedly, if we believe them. But we know that they're trading between 200 million and 2.9 billion ounces of silver per day. So how much is real? Yeah, so I think that silver will do just fine, but if a genie came out of the bottle and said you get 2 trades, it would be buy silver and switch to gold when the ratio corrects. If they said 1 trade, I would probably buy gold, even realizing that it does not have the value or the potential in any way, shape, or form that silver does. But that's a calculated speculation.
AndySchectman has highlighted ongoing concerns about the practices of Western commercial banks, particularly their engagement in naked shorting, a strategy where they sell gold and silver they do not own to manipulate prices. This manipulation is becoming increasingly difficult due to rising physical demand from countries like China and India. The Silver Institute reports that in 2023, India accounted for 3,771 tons of silver demand in jewelry and silverware, representing 46.9% of global demand in these sectors. This robust demand complicates the bank's ability to suppress prices through naked shorting, as more countries seek physical delivery of these precious metals. Strong central bank buying is expected to support gold prices, even if China's purchases decelerate. Precious metals strategists at Heraeus suggest that both silver and gold could experience reduced Indian demand later this year. Central banks can exert artificial control over gold prices by manipulating supply and demand dynamics. Schectman argues that mainstream reports and official statements can be used to manipulate market sentiment and prices. He points out that the International Monetary Fund and Western media might downplay the extent of gold accumulation by countries like China, thereby maintaining a facade of control over the gold market. Let's get back to the interview.
Going back throughout the years, these countries who are standing for delivery, like China and India, to name a few, weren't core.
We seem to have lost Andy's feed. Let's see if we can get him back. Hold on.
I'm here.
Okay, continue. Go ahead. You said, and India, perhaps.
So anyways, bottom line is these countries were not able to or had any desire or were really coordinated or cunning or wealthy enough to stand for delivery. That's exactly what I think has been the fly in the ointment of the Western commercial banks, who have been naked shorting the heck out of gold and silver for a very long time. And maybe indeed that is what happened. I don't know. I mean, look, I'd say this. I find it silly that the Western media comes out and says all of this stuff. I don't care what the paper said. I think it's fair to say that no one knows how much gold really anyone owns. I mean, supposedly the United States has 8,133 metric tons of gold, but when was the last time that's been validated and verified? And my whole career, everyone said the amount of gold that China owns is way understated. And we were just talking about this from the perspective of the IMF and a lead analyst for Bank of Montreal, who said the same things just a few weeks ago, that they way understate things. Look, there are people that will tell you that since the beginning of the century, since 2000, 2001, 2002, that China's been accumulating anywhere between 1,000 and 1,500 metric tons a year, plus mining between 400 and 500 metric tons a year. So how is it that we're supposed to believe they only have 2,600 metric tons? This is why Alistair McLeod will tell you that they have more like 40,000 metric tons. And others would say things that are similar. At the same time, you have banks like ICBC, state-owned banks that are by proxy accumulating metal on behalf of the PBOC, and that is not reported to the IMF, nor is all the metal that they produce. So I don't really buy it. But it's amazing what a little rhetoric and lip service by the mainstream will do, or even by the IMF, and maybe some suppression by Comex, hoodwinking the managed money into maybe just one more time going short and allowing them out of these short positions. I don't know, but I'll tell you that these banks are working with the refineries in South Africa and in Switzerland. That stuff's not reported. If gold is not of 9995 quality, it's not reported to the IMF. So there's a lot of stuff that's going on that just isn't reported. And I don't know. Then again, I don't know how much I believe it, to be honest with you. But I will simply say that it's certainly, if you wanted to take an optimistic angle on it and say that's exactly what they did, they worked out a deal to get them out of these positions. And maybe that's what is happening. I don't know. But again, this is just correction within a primary trend. I don't put a ton of stock into all of this rhetoric. But what I will say to you is that I don't believe the Chinese are being honest with anyone as to how much gold they own, and nor are we. For that matter, why would we not have audited Fort Knox when Ron Paul asked for it? Why was it voted down? Why did it take years to give back the bars to Germany?
Germany, yeah.
There's a million things that you can point to it, and to take that at face value, I think, is silly.
Given the complexities and potential manipulations, including naked shorting by Western commercial banks, the robust physical demand from countries like China and India, and the strategic maneuvers by central banks to control supply and demand dynamics, how do you think individual investors should navigate the precious metals market? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.